Hi all. So today we are going to discuss 7.4 Miscellaneous Audit. So paper 12 June 2020 supplementary recently I downloaded from the Institute website. Okay, please all of you download that, and I'm using the Institute website recent version downloaded. Okay, supplementary paper 12 June 2020, page number 71. So 7.4 Miscellaneous Audit. This is about various types of audit they covered under a single chapter, and it is called as Miscellaneous Audit 7.4. You can expect around 6 to 8 marks from this topic. So we will discuss what is there inside. Okay, just take down the page number 71. All of you please take down the page number 71. That is branch audit, joint audit. Branch audit, joint audit. We already discussed something related to branch audit in our previous classes. So branch audit is basically branch office located somewhere, maybe outside India, in abroad it is located. So we have to conduct audit for that branch also. That is branch audit. Okay, so what is branch then? Branch means, how can we define the branch? That is what given under the first para. What is branch as per section Companies Act? What is branch? Okay, so first para is what? Branch office in relation to a company, means any establishment described as such by the company. Any establishment is disclosed by the company as branch means, then that is branch. It is not like that commercial production or sale should be happen, or it is about the company, how they are if they disclose that particular establishment as a branch, then that is branch. Okay, branch office. So normally they are meaning the distant location thing. Actually, distant location means the main auditor will be in India, or branches will be in different countries. So we have to call it that as a branch. Okay, so case to case it will change. So the point is, why this branch office branch audit? So practically auditor means single auditor. He will do the audit for entire company. That is general understanding. But in case of a large companies or having different branches in different countries, single auditor, the one person cannot do audit for all the locations. So they will appoint branch auditors, and they will conduct that branch auditor will conduct the branch audit. They will do a lot of things. They have a equal powers, rights related to that branch. They can ask lot of questions, and they can ask entire books of accounts, and they can audit, and they can issue the branch audit report. That is the job of branch auditors. So what is the job of the main auditor? Main auditor, the ultimate statutory auditor. He will collect the information from the branch auditors. He will collect the reports from the branch auditor, and he will incorporate to the main audit report, whether including certain observation or not including the certain observation from the branch audit report. That is discretion of the main auditor, that is main statutory auditor. He might include or he may not include the branch audit observation points, qualifications. Okay, branch audit qualifications. So the ultimate responsibility for the company's overall audit report belongs to only the main auditor. He has to responsible. So that is what we are going to discuss here. Okay, so second para, I am going to read the second para. Audit of branch office by company's auditor or branch auditor. Where a company has a branch office, the accounts at office shall be audited by the either company's auditor appointed on the company's in AGM, or by any other person qualified or appointed as an auditor of the company under section 213. Such branch audit shall be appointed as such under section 139 of the 2013 first part of section 143 subsection 8 of the 2013 Act. So similar to main auditor, only branch auditor is also appointed. So the point is, branch audit is conducted by main, that is a single auditor can do multiple branches but sometimes due to non-availability of time, due to time shortage and lack of time, someone will be appointed, not the main auditor, they will do the job. Okay, that is the meaning. Now come to the third para. Audit of branch outside India. Normally outside India means person who is qualified, because in India chartered accountant is the qualified person to conduct the audit, financial audit or statutory audit. But in case of another country, another qualification, similar qualification related to, you can compare with the chartered accountancy in India. So such a kind of qualification is recognized, they will be appointed as an auditor. Okay, instead of chartered accountant of India and India only possible. In that country, for example, in US, if you take US, you can recognize that certified public accountants, that is CPA, can be recognized as an auditors normally. Okay, like many countries, they have their own qualification. That person we have to appoint as an auditor for that country. Okay, so as a branch auditor, that is what said here. I am going to read the third para now. Audit of branch offices outside India. Where the branch office is situated in country outside India, the accounts of the branch office shall be audited either by the company's auditor or by an accountant or by any other person duly qualified to act as an auditor of the accounts of the branch office in accordance with the laws of that country. The duties and powers of the company's auditor with reference to the audit of the branch and the branch auditor, if any, shall be may be prescribed second part of section 143, section 8 of the 2013 Act. So same powers and duties they also have. Branch auditor, what they are saying, company auditor, that is main statutory auditor, can be also appointed as a branch auditor. If he is willing to go abroad and do audit, he can be appointed as an auditor, or else they can appoint any other person qualified under that country as an auditor, they can be appointed as an auditor. I am reading the fourth para. Report by branch auditor to company's auditor. The branch auditor shall prepare a report on the accounts of the branch examined by him and sent to the company. Other company's auditor shall deal with the report of the branch auditor in respect in his report in such manner as he considered necessary to provision to section 143 subsection 8 of the 2013 Act. So 2013 Act. So what they are saying, branch auditor is preparing the report and it is sent to main auditor. Okay, it is sent to main auditor. And the next thing, duties and powers of, next para I am reading, duties and powers of company's auditor in connection with the branch audit. What is the company's audit? That is main auditor duties and powers on the branch audit report. That's what we are going to read. Duties and powers of the company's auditor, main audit with reference to audit of branch and auditor shall be as contained in section 1 to 43 to subsection 1 to 143 to subsection 4 of the 2013 Act and Rule 12(1) of the company's audit and auditor amendment rules 2014. As the company auditor is responsible, even branch auditor is appointed. One more purpose you remember, even branch auditor is appointed, only the company auditor is the ultimate responsible for overall consolidation and overall reporting purpose. Branch audit, only the main auditor is responsible. Next para, small one line para I am reading. Branch auditor responsible to report fraud as applicable to company's auditor applies to branch auditor also. You remember that 1 crore fraud, more than 1 crore fraud. That same thing applicable to branch auditor is also. Branch auditor has to report that fraud if it is applicable. Okay. Then come to the joint audit. Then what about joint audit? Branch audit is basically, there is a one main auditor and there is other auditors who is appointed for branches, that is branch auditors. Okay. In case of joint audit, the work is shared between the auditors. For example, in India, you have north, east, west, south. So for north region, they will appoint one auditor. For south region, they will appoint one auditor. That company will appoint one auditor. For east region, that same company will appoint one auditor. For west region, that same company will appoint one auditor. Okay, so one company appointing 4 auditors for 4 regions. So for their region, they are responsible for their work. That is joint audit. Jointly conducting audit for one company. Jointly conducting, the auditors together jointly conducting audit for a single company. Okay. I am reading the paragraph. In big corporate, more than one person or firm of chartered accountants are appointed as a joint auditor for conducting the audit of the company. This practice of appointing joint auditor accrues great advantage of the company in a big organization. Task of carrying out audit cannot be accomplished with a single individual. So for overcoming such situation, joint auditor whereas appointed. Advantages of joint audit. What is advantages? If I have more than one auditor, what is the advantage? Work will be completed immediately, and you have a lot of knowledge because different auditor, they have a different experience. Correct? We will see what is the advantages given at the input material. I am reading the bullet points. Low workload. As I said, workload is less because work is shared between the auditors. Timely completion of work. Work is completed quickly because work is shared between more than one auditor. Sharing of expertise, knowledge, experience sharing, improved quality of service, healthy competition. All these things are general point. Come to the disadvantage. If appoint more than one auditor, what is the disadvantage? I have to spend more money. I have to give more fees to auditors because I am appointing more than one auditor. Correct? And also superiority complex between auditors. So one auditor will say I am correct. Another auditor will say my point is correct. Another auditor will say my observation only is the final observation. So superiority complex. And for small organization, this thing will not applicable. Only for big corporates it is applicable. Okay, and there might be lack of coordination in work also because of superiority complex. That is what said here. Okay, I am just reading the bullet points. Disadvantage of joint audit. Superiority complex of some auditor. Yes. Bullet point 2. Costly for small entity. Yes. Lack of coordination in work. Uncertainty about liability of who is liable for what. Which auditor is liable for whether he is liable for other auditors' work. Sometimes there will be confusion. Okay. Come to the next para. SA 299. SA 299 issued by the Institute of Cost Accountants of India on responsibility of joint auditor. SA 299 is issued by Institute of Cost Accountant of India or Institute of Chartered Accountant of India. It is issued by Institute of Chartered Accountant of India, not Institute of Cost Accountant of India. SA means what? Standards on Auditing. It is issued by Institute of Chartered Accountant of India. Only Cost Accounting Standard is issued by the Institute of Cost Accountant of India. So this is error. You please correct. SA 299 issued by the Institute of Chartered Accountant of India on responsibility of joint auditor. Okay. We will understand what is that responsibility. Come to the next para. Normally the joint auditor is able to arrive at agreed report. However, where the joint auditors are in disagreement with regard to any matters covered by report, each one of them should express his opinion through a separate report. A joint auditor is not bound by the views of the majority of the joint auditor regarding matters to be covered in the report, should express his opinion in a separate report in case of disagreement. So what they are saying, if all joint auditors, each for their area, they have to prepare one report, and finally they have to prepare the final report all together. If they have any disagreement, auditor A, B, C, D, 4 auditor, all are joint auditor. A is disagreeing with B, B is disagreeing with C. Like that, there is a disagreement between the auditors because they are saying, my point I will put like this. As per my interpretation, I will write the report like this only. They have a freedom and power to write their report on their own manner. They need not to worry about other auditors because this is joint audit, not branch audit. Okay, so all are having equal power. So the point is, if they have a disagreement, the joint auditor can issue separate report. They need not to combine the report of other auditors because due to this disagreement. That is what they said. Next para I am reading. In respect of audit work divided among the joint auditor, each of joint auditor is responsible only for the work allocated to him, whether or not he has prepared a separate report on the work performed by him. So joint auditor, in case of joint auditor, what work allocated to them, for them only, for that work only they are responsible. North region, A auditor is responsible means for anything happened in North region, for that only he is responsible. Something is happened in South region, then North region auditor is not responsible. Okay. So the point is, if the work is allotted separately, it is not it can be performed separately by that separate auditor, by that separate joint auditor means, then he only responsible. Okay, you can't bring the other auditor's work responsible for this auditor. So the point is, if work is allocated separately, means this is the stand. But if sometime joint auditor will work together, all A, B, C, D will work together and will complete one work, complete one task. You got it or not? They can't work separate. They will not able to work separately due to scope of work is like that. They have to conduct the physical verification together. All the auditors has to conduct the physical verification together sometimes. So that in that time all the auditors are responsible for the work together and individually and severally and jointly also. Depends on the scope of work, what I am doing, so what I am responsible. Sometimes they do together, sometimes they will execute the work together. In such a case, all are responsible for the work done by the auditors. That's what they are saying. Next thing, that bullet point 1. First bullet point, respect of the audit work which is not divided among joint and is carried out by all of them. They are responsible jointly and severally when if the work is not divided. It is not a divided work, it is a common work. Okay. Second bullet point. So second bullet point, in respect of decision taken by all the joint audit concerning the nature, timing or actions and audit procedure to be performed by any of the joint audit may however be clarified that all joint are responsible only in respect of the appropriate decision concerning the nature. If all joint auditors together taken one decision, okay, all the joint auditors have discussed and they decided about one aspect, any aspect like accounting standard, implementation of accounting standard or interpretation, any area, if they joined together and they taken one decision, mean all are responsible because it is a group decision, not an independent decision. So for that decision, all joint audits are responsible. Third bullet point I am reading. Timing or extent of the audit procedure agreed upon among them. Proper execution of these audit procedures is separate and specific responsibility of the joint auditor concerned. So like this, they have given many points. You please go through. I will go to the next topic. Okay. You please go through and then listen the video. If anything is left out, I believe that you can able to understand based on our discussion. Okay. So all are general points. This is not highly technical provisions actually. This is general points which you can link as a provision. General point is given as a provision here. Okay. You have to think generally and it must be available in the provision also. Okay. There is no much technical here. So next thing is, what is the page number? 73. Take page number 73. Audit of shares and debentures. Audit of shares and debentures. So while this type of topic like audit of shares and debentures or audit of share capital, audit of bonus shares, audit of buyback, audit of splitting of shares, audit of share transfer audit, audit of reissue of forfeited shares, audit of debentures, audit of dividends, all these aspects is related to Companies Act. First of all these aspect is related to Companies Act. Even it is a Companies Act, this is related to accounting topic actually. All this topic is related to accounting under the Companies Act. It is not only pure Companies Act, it is related to accounts also. Audit of shares, accounting of shares, right? So you should able to think little bit accounts also. First you have to think about accounts and you have to convert that accounts into audit. First you have to think related to accounts, then you have to convert that accounts into audit. And also you have to think little bit provisions of the Companies Act generally. Audit of shares, issue of shares, that is when I am issuing shares I have to audit generally, right? So if I want to issue shares, you have to think certain things related to shares. So what are the points you should able to think yourself? For example, shares means how can I issue my shares? First of all, I should have my memorandum of association, articles of association. There only I have mentioned the share capital amount, correct? So if I am auditing the share, I have to check whether what is my share capital. Authorized share capital is how much. how much I am issuing. That point I have to check as an auditor. So when I am issuing shares, I cannot issue as it is. If I am going for an issue, there should be board meeting, there should be board resolution for issue of share capital, correct? If company want to raise money, they can't do as it is. Board of directors should meet and discuss, and they should pass a resolution in board meeting. All the things related to accounts, provisions, generally you have to think first, then you have to read the provision. So as an auditor, I have to check whether the board resolution is passed or not. Then what else you can think? So if I want to issue shares, I would have issued the prospectus first, correct? Without prospectus, I can't issue shares, right? So I have to read as an auditor, I have to check prospectus. Purpose of the issue, objective of the issue. Why this issue? What is the amount of issue? What is the amount? Minimum subscription is how much? Minimum subscription is received or not during the issue. As an auditor, I have to check. Share application money should be minimum 5% on the total face value, total thing. As per the Companies Act, minimum 5% I should collect as a share application money, whether they collected or not. So whether minimum subscription as per the Companies Act is received or not. For example, 90%, 100 rupees is my share issue value, means I should collect 90%, means 90 rupees I should have collected. Otherwise, I have to refund the money with the interest. Okay? Like this, you have to think all the accounts, and you have to think as a provision under the Companies Act, as well as you have to think about accounts, and you have to convert this to audit. You have to convert whatever you are thinking into audit. How to convert that? For example, application money received, excess money application is received. Then what I have to do? I have to refund the excess application money. As an auditor, you have to write a point, check whether excess application money is refunded. If it is not refunded within timeline and as per the Companies Act, check whether it is refunded with the interest or not. Okay? Like this, many points. Even underwriting commission I have to pay during the issue of share, whether it is paid as per the agreement or not. That I have to check. And once application money is received, then I have to allot the shares. Check allotment money is received, cash is received, or how it is received, amount is received. I have to check the receipts, vouchers also. Audit the vouchers. Correct? First call money, final call money. All these things I have to think, and according to that I have to write a point as an audit point. Okay. So we will go through here what is the thing actually. Allotment of securities by company. I am reading section 39. Securities means securities so and so, defined securities contract. How to check the allotment of securities of a company. I am reading the first point under that. Study the contract. Determine how many shares are agreed to be issued and what value and nature and details of the consideration. Value, quantity, purpose. All the things I have to check first in the contract. That is prospectus normally. Second bullet point. Examine the prospectus to see the substance of the relevant terms to issue, including the mode of payment, purchase consideration in case of issue to vendor of the business, of payable commission to underwriters, or payability of the preliminary expenses. I have to check to whom, whether it is issued to shareholders or whether it is issued to vendor during the amalgamation, or even the commission paid to underwriters. All the things I have to check from the prospectus, whether it is paid as per the prospectus or not. And the third bullet point, check whether minimum amount subscribed as stated in the prospectus. That also I have to check. Next bullet point, check whether sum payable as an application for the amount so started have been paid and received by the company by check or other instrument. How the application money is received, by check or other instrument, I have to check. Next bullet point, check whether amount payable on application on every security shall not be less than 5% of the nominal amount. Nominal value I should not collect less than 5%. That is Companies Act provision. I have to check. Next bullet point, examine board meeting. Board meeting regarding purpose for which securities issued and utilized for the same. Why this issue of shares happened? They are collecting money. Why they are collecting money? For what purpose they are collecting? They collected the money. Whether they spent for the purpose they collected or they are using for some other purpose. As an auditor, I have to check. Okay. Next bullet point, check whether amount is refunded. Excess application money amount should be refunded. Okay. Within 30 days. That's what they said. Come to the next bullet point. Check whether company has filed the registrar of return of allotment or not. So once the share capital is issued, they have to file a or form with the ROC, Register of Companies, okay, MCA that is. So this is the general points. You have to, if there is a topic share capital, means you have to think the characters related to share capital. In terms of accounting also you have to think in terms of general aspect also. If they are going for an issue of share, there will be a meeting, there will be a prospectus, there will be share application, there will be allotment, there will be refund. This is accounting aspect. This you have to convert as an audit aspect. Same thing you have to write as an auditor. Check whether a refund of application made within the timeline or not. Okay. Next page you complete 74. Alteration of share capital, section 61. Alteration of share capital means what? What you are altering? You are altering what? MOA, AOA. AOA you are altering. In AOA you have share capital class, right? So in that class, for example, authorized share capital is 10 lakh rupees. I am going to change it to 20 lakh rupees. First I have to amend my articles of association. For amending articles of association, I should have passed some resolution also, board meeting. So first thing, if I am altering my share capital, I have to check whether it is amended in articles of association or not. That is my first point. And whether the sufficient approval board resolution is passed or not, board meeting is there or not. Okay. And also ordinary resolution is passed in the general meeting or not, additional thing as per the Companies Act. And also the revised AOA, MOA is published to members and as well as it is available in the company's website or not. All these points you have to think. Okay, few points are given, and also all the register is also properly updated or not. That also you have to check. I am reading the next point. Remember section number also. 61 is for alteration, 39 is for allotment of shares, 61 is for alteration, 63 is for bonus shares, 68 is for buyback. So 63 I am reading now. Issue of bonus shares. Issue of bonus shares. So bonus share means what? First you have to think what is bonus share. Bonus share means you are giving some shares at free of cost to the existing shareholders. That is bonus shares. Bonus means you are giving free of cost to the existing shareholders. So bonus shares can be issued by what money? Which money you can use for bonus shares? You can use your securities premium account, correct? You can use your general reserve. You can't issue bonus shares by utilizing non-cash reserve. Non-cash reserve means what? For example, revaluation of fixed assets. Revaluation of fixed assets. What is that? Fixed assets value is 100 rupees. I am increasing the fixed asset value to 200 rupees. 100 to 200. Extra how much I am putting? 100 rupees. Because of revaluation of fixed assets. By applying AS and plant property equipment, I am increasing my fixed assets value. So extra 100 rupees is increased asset side. Extra 100 rupees is increased asset side. I have to show something liability side also to tally the balance sheet. That is fixed asset revaluation reserve. I will put under the reserve account. I will write fixed asset revaluation reserve. That reserve is a cash reserve or non-cash reserve? It's a non-cash reserve. That reserve is not available for utilizing bonus shares. So only cash reserve is available for utilizing for the purpose of bonus shares, issuing bonus shares. So I have to check if I am issuing the bonus shares. Again I have to check my articles of association whether it is permitted. I have to pass board resolution to issue bonus shares, and I have to check whether I am using from cash reserve, non-cash reserve, not available for bonus issue. What else you can think related to bonus shares? It should be issued only to your existing shareholder. And also one more thing is bonus shares can be issued only for the fully paid up shares. Partly paid up shares, they are not eligible for bonus shares. Only fully paid up shares eligible for bonus shares. Then I have to check whether only fully paid up shares are eligible for bonus shares. What else related to bonus shares you can think? So what else you can think? Bonus shares. So before issuing bonus shares, there are some other point also. I should not make any default. I should provide depreciation. Accumulated loss should not be there, and I have to provide. I should not make any default for paying interest to my debenture holder, fixed deposit holders. First I have to pay them, then only I can issue bonus to my shareholder. Okay, all these things only is discussed here. All these things is discussed here. You please go through yourself. Okay, and one more point is, I cannot issue bonus share instead of dividend. I cannot issue bonus share instead of dividend. Dividend is a separate thing, bonus share is separate thing. I cannot say that this year instead of dividend you take bonus shares. Okay, it's a separate decision. It should not be mixed with the dividend. Dividend is a separate decision, bonus share is a separate decision. Both you should not mix, and it is not in lieu of dividend. That is one point. Okay, so come to the next page. Section 68. Section 68, buyback. I already discussed in classroom related to buyback, lot of points. Whatever discussion we made in classroom related to buyback, you remember all those points. Accounting for buyback, what are the points I said? Many points we discussed related to accounting for buyback. For example, buyback limit 25% of share capital and reserves and surplus. Maximum I can go for 25% of share capital and reserves and surplus. More than that I cannot use for buyback. Correct? Up to 10% means board resolution is enough. If it is more than 10%, 10% to 25%, I have to get the pass. I have to call the meeting and I have to pass the resolution at the general meeting. Okay. Buyback should be authorized by articles of association, then only I can go for buyback. Correct? And what else? Buyback can be issued by utilizing your reserves, securities premium account, and by issuing new shares which is not is similar shares which we are buying back now. Should be new shares which is not similar to the existing buyback shares, so totally different shares. That all these points we discussed in our classroom. What else we discussed? Post buyback, my debt to equity ratio should not be, I have to maintain the debt to equity ratio 2:1 minimum. Correct? And funds availability also 25% of the funds available only I can use for buyback. So what else? Buyback should be completed within 1 year from the date of announcement. So, and also what else? You can't do another buyback within 1 year once this buyback is announced. 1 year waiting period. This buyback should be completed within 1 year. Correct? No new issue of shares which is bought back. So there is no new issue of shares within 6 months. Within 6 months of the same shares which is bought back. Just now I bought back X type of shares. I should not issue X type of new shares again to shareholder within 6 months. All these points we discussed in our classroom. So you please remember our class notes, and same accounting point you write. Check whether 2:1 is maintained. Check whether 25% it should not exceed 25%. Check whether up to 10% board resolution is obtained. Check whether more than 10 to 25% resolution is obtained through general meeting. And what else? Like this, check whether 1 year gap is maintained post buyback for another buyback. Okay, check whether the buyback process is completed within 1 year. Like this you have to write the point. Accounting point should be converted as an audit point. Okay, check whether all the bought back shares physical shares whatever you bought back should be destroyed within 7 days. Should be destroyed within 7 days. Physical things are destroyed within 7 days. Like this you have to write the point. Okay, and also one more point, fully paid up shares only eligible for buyback. Check whether the only fully paid up shares is eligible only for buyback. All these point, accounting point, you convert as an audit point. Come to the next page. Next page, you please go through whatever I discussed. The same point is mentioned here in the buyback. All the points, most of the points I covered. You please go through. Come to the page number 76. Splitting of shares of face value from 10 to 1 rupees share. What is splitting of face value? Presently my face value is 10 rupees. One share value is 10 rupees. I have totally 1 lakh shares. I am going to change these shares to 10 to 1. 10 to 1 I am going to change. Meaning face value is 10. presently that I am going to change it as 1. Okay, so then again my articles of association will get affect. Again my articles of association will get affect, correct? Because I have 1 lakh shares, 10 rupees is the face value, 1 lakh into 10 equal to 10 lakh. Now what I am going to do is, I am going to change it this as 1 rupee, and I am going to increase my number of shares. 1 lakh is the present shares, I am going to increase to 10 lakh shares. 10 rupees is the present face value, I am going to decrease to 1 rupees. So 1 lakh into 10 equal to 10 lakh, 10 lakh into 1 equal to 10 lakh. No change in total value, but there is a change in number of shares and face value amount. So there is a alteration in the articles. Again I have to alter my articles of association. If I want to change my articles of association, I have to pass board resolution, I have to get the general meeting, ordinary resolution in the general meeting, I have to effect the MOA, AOA, revised thing I have to circulate, all these things. Come to next heading. Next heading is share transfer audit. Next heading is share transfer audit. What is this share transfer audit? What is this share transfer? What is the meaning of share transfer? Share transfer means one person is selling the shares to another person. Transferring the shares means one person is transferring the share, giving the rights and ownership and transferring the rights and ownership to the another person. That is share transfer audit. The meaning, as an auditor, what I have to do? Share transfer is happening. That means one person name record, one person shares are transferred to another person. So during this thing, what will happen? All the process I have to check. I have to check all the process. So I am just going through few points in the share transfer audit. First point I am reading. Inspection of articles of regarding prescribed form of transfer and other provision, particularly the time laid down by articles or law. So related to transfer of share transfer, articles of association, there will be a clause. I have to check articles of association is followed. Form as per articles of association is followed or not. Okay, second bullet point, second point, Roman number point, Roman number 2. Okay, notification by transferor of the lodgement. Notification by transferor of the lodgement made by the transferee and the inspect the objection received. The thing is, transferor, transferee. Transferor, transferee. Transferee is the recipient. Transferee should not raise any objection. Sometimes share capital is partly paid. Call money pending. If you are transferring to someone, that someone is liable to pay the balance amount. You got it or not? Someone is liable to pay the transferee is liable to pay the balance amount. That means I have to get the no objection certificate from the transferee. I am transferring the shares to you, so you are liable for the balance call money. For that I will get the no objection certificate from the transferee. That is what said here. First pass Roman number point 2, Roman letter point 3 discussed about this point only. Okay. And I have to get the concurrence of transferor and transferee both should sign the document. Come to the next page, 77, Roman letter 4. So Roman letter 4, scrutiny of transfer forms. As an auditor, I am scrutinizing all these forms, whether stamp duty is there or not in the transfer form, whether everything details are correctly mentioned in the form or not, whether it is properly signed or not. Okay, all this point is given. Fifth Roman letter point is comparison of signature of transferor on the transfer form with the signature on the original application for shares on the transfer form. I am comparing the transferor signature. Share application is signed, now transfer form is signing. Both the signatures are correct or not. I am checking whether transferor only transferring or some other person misusing the transferor signature. For that reason, as an auditor, I am auditing. Okay. Sixth point, ascertaining none of the transferee is disqualified from holding shares in the company. The recipient, the transferee, should not be disqualified as to become a shareholder in this company. Okay. Like this, many point is given. Please you go through yourself. I'll move to the page number 78. Reissue of forfeited shares. Again accounts. Forfeited share means what? Somebody is not repaid the call money. call made but he is not paying the amount, so I am going to cancel the shares. I am going to cancel his shares. That is forfeiture shares. When I am forfeiting the shares, what will happen? Whatever the money already collected from him, whether I will refund him or I will transfer to capital reserve account. Whatever the money already collected from him, I will not repay. I will transfer that money to capital reserve account. Correct? I will transfer to capital reserve account. While reissuing, I will utilize this amount, because normally while reissuing, I will issue with some discount, because I already having gain some capital reserve gain, so that I can issue some thing on discount also. So while issuing a discount, reissuing at discount, I will adjust this capital reserve. As an auditor, I will check first of all forfeiture of shares, reissue of forfeiture shares. I will check to whom it is reissued, how it is reissued, what is the price, what is the issue price. If it is discount price, it should not violate the ultimate Companies Act, because as per the Companies Act, you cannot issue shares at discount. You have to compare capital reserve versus discount. How much? It should not be less than the capital reserve. Okay. The thing is, if I am reissuing, I should have, first of all, I should have called the board meeting. Board resolution should be passed, and number of shares I am reissuing, to whom it is reissuing, I have to audit. Okay, like this the point is given. I am just going through the point. First point, the auditor should ascertain the board of director as the authority, and the board of director whether they have authority or not under the articles of association to reissue forfeited shares. Check the relevant resolution of the board of directors. All the point you write this board meeting resolution. Okay. Second point, vouch the amount collected from the person to whom the shares have been allotted and verify the entries recorded from the allotment. As an auditor, what I have to do? I am reissuing, company is reissuing shares, meaning they are collecting money from the shareholders. So how they collected? I have to vouch the vouchers. How they collected the money, I have to vouch. Accounting aspect, I have to think. How much is received? Total amount is received. How much is reissued? How much is issued out of that reissue? Okay. Third point, verify that computation of surplus amount rising in the reissue of shares credited to capital reserve account. If I am reissuing at premium, means that extra amount should be transferred to capital reserve account. Okay. So the thing is, so the point is, capital reserve, when we will transfer, actually share forfeiture account, we have some gain that we are utilizing for reissue purpose. After reissue also, you have something left out. You have something left out in the books of accounts, that we will transfer to capital reserve. Okay. So reissue of forfeited shares, you have something left out in the share forfeiture account, that we will utilize for reissue purpose. Balance is available, that we will transfer to capital reserve. So I have to check as an auditor, finally how much is available in the share forfeiture account after reissue, what is available, that I will transfer to capital reserve. That is my ultimate gain. Okay. So come to the next page. Audit of debentures. Audit of debentures. Audit of debentures, again it is accounting. Debentures, how it is issued? Like shares, it is also issued. Prospectus is issued, application is issued, and amount is collected. While issuing debentures, I would have given some agreement, contract. I have to follow that contract. I have to appoint debenture trustee. Debenture trustee will take care about debenture repayment, rate of interest, everything. Then I have to pay interest to my debenture holders properly. I have to pay the principal's maturity amount to my debenture holder properly as per the contract. I have to create debenture redemption reserve. At every interval, I have to create debenture redemption reserve. For the repayment purpose, I have to create this debenture redemption reserve. Correct? All the point related to debentures, you have to think first. Then you have to convert that point as an audit point. So normally, if I am issuing debenture shares, anything, there should be an approval required. Board approval, board meeting, board resolution is required. I have to check articles of association, whether it is permitted or not. Okay, whether it is a convertible debentures or non-convertible debentures. If it is convertible debentures, whether it is converted as per the contract or not. Convertible debenture means it convertible into shares. Non-convertible means it is not convertible into shares. Okay, and also all debentures should come with maturity. All debentures should come with maturity or repayment schedule. Timeline should be given while issuing itself. Life of the debenture, that is. Okay, all these points you have to think and you have to write as a audit point. So debenture meaning, it is like a loans, it is like a debt. It is not a debenture holder is not a shareholder. They are not owners of the company. They are only creditors of the company. So when I have to appoint debentures, if I am issuing debentures to public and there are more than 500 members as a debenture holder, means I have to appoint one debenture trustee separately. Okay, I am directly going to the auditor's duty. You please go through the above theory. Okay, whatever discussion they are discussing about what is debenture meaning, everything, convertible, non-convertible. So I am going to the auditor's duty. As an auditor, what I have to do? If there is an issue of debenture, as an auditor, what I have to do? First point, auditor should verify the prospectus has been duly filed with registrar before the date of allotment of debenture. Debenture or shares, I have to issue prospectus. That prospectus should be filed with the ROC, Register of Companies. For the verification, we have to file whether they filed it or not. Second point, you should check the amount collected in the cash book with the counterfoils receipt issued to the applicant. Also cross-check the amount into the application allotment book. When I am issuing debentures, means I am collecting the money. Normally cash, they don't nowadays they don't entertain cash. It is through bank. So if it is received in a cash, I have to vouch the cash book. How much is received? How much is issued as an application? I have to cross-check cash received versus application issued. Okay, application subscribed. Okay, third point, he should examine the debenture trust deed and note the condition contained therein as to issue repayment. As an auditor, I have to check deed agreement, debenture trust agreement, and repayment schedule. What is mentioned, that as an auditor I have to read. Next, fourth bullet point, if the debenture are covered by mortgage of charge, it should be verified that charge has been correctly recorded in the register of mortgage and charges and has been also registered with the register of the companies. What they are saying, when I am issuing a debenture, that means when I am raising a loan, secured debenture, unsecured debentures. What is secured debenture, unsecured debenture? If it is a secured debentures, when I am raising a loan, when I am raising a debt, if it is a secured debt, means same company will be having fixed assets also. While they are raising loan, they will pledge their fixed assets. They will pledge their fixed assets also. That is charge on fixed assets on behalf of the loan. If there is a default in loan, they will take the assets. They will materialize the asset and they will realize the money. Okay, so that is charge on the assets, secured debentures. That is what said here as a covered by mortgage of charge. Fourth bullet point, fifth bullet point, compliance with SEBI guidelines, check it. Sixth bullet point, whether debentures have been issued fully paid up to vendors. Sometimes what will happen, I will not issue for cash. Debenture I will not issue for cash. Instead of that, I will issue to my vendors. I would have purchased some fixed assets. I don't have money to pay them. So I will issue debenture. Instead of cash, I will issue debentures and I will pay interest. Finally, I will pay the maturity amount. Okay, come to the next page. Page number 80. Interest on debentures. What is this interest on debentures? I have to pay interest to the debenture because I borrowed, period, rate of interest, how it is paid, frequency. Okay, all those things you have to, accounting aspect you have to think and you have to convert it to as an auditing aspect. Audited duty, payment of interest, how it is paid, as per the contract it is paid or not, rate of interest is correctly paid or not, repayment of thing, whether it is acknowledged by the debenture holder or not, how it is paid, vouching the payment, whether the interest is debited to P&L account to properly or not. It is shown in the P&L account or not. If anything is not payable within the timeline, whether it is shown under the outstanding or not. Debenture outstanding payable. Okay. Then come to the next thing, redemption of debenture. Please go through the English mentioned in the insured material. This is for our discussion, understanding purpose I am discussing. You please go through the insured material. Before going through, you should think the characters related to debentures. Then you have to convert that as an auditing point. Then you finally you read the material. Okay, so that you can write lot of points in examination. Redemption of debentures. What is redemption? Repaying the principal amount. As per the contract, I would have given 3 years debenture, 5 year debenture, 10 year debenture, means I have to repay. So while redemption with the interest, with some amount I have to pay, with the premium I would have repay, means I would have agreements I have to repay with the premium. So for redemption purpose, I have to create debenture redemption reserve clear. Every interval I have to create debenture reserve. As an auditor, I have to check whether redemption is happening as per the contract or not. Whether it is paid through bank account, I have to vouch the bank accounts, recipient of debenture holders. I have to check whether debenture redemption reserve is created properly or not. Okay. If it is not paid within the timeline, whether it is properly accounted as a due or not. Okay. So like this, there are lot of point is given. Come to the next page number 81. Debenture issued as a collateral security. Sometimes what will happen? I would have got a loan from the bank, for example 100 crore. Banker will ask additional security from the company. So company will say, I will give debenture as a collateral security. Meaning, if I defaulted the loan, then you can get debentures from my company. If I defaulted the loan, then only it is converted as a debenture. Okay. So the point is, it is contingent liability. It is like a contingent liability. Debenture issued as a collateral agreement, this is a contingent liability because it is actually not issued. Amount is not received. I borrowed money. If I fail to pay this amount, instead of this amount, I will give another debenture. I will create another liability for instead of this liability. That is in debenture issued as a collateral security. Okay. Come to the next one. Audit of divisible profits and dividends. I am in the page number 81. Audit of divisible profits and dividend. Declaration of dividend, section 123. Remember, what is declaration of dividend? What is dividend? Actually, it is paid to whom? Dividend is paid to shareholder. It is an appropriation of profit, and it should be paid when it is once it is declared within 30 days. It should be paid to the dividend holder, the shareholders. Okay. So there is a lot of procedures before declaration of dividend. Declaration of dividend means I am sharing the profit with shareholder. So before sharing the profit, I should account my loss first, and accumulated loss, accumulated depreciation. Then only I can pay dividend. That is general rules. So if it is declared within 5 days, I have to create one separate bank account. Normally you can call that account as earmarked account. Earmarked account for some purpose. Earmarked account means for some purpose. Okay. The thing is, I have to transfer this dividend to that earmarked account. Then I have to pay to my shareholder within 30 days. Okay. So the point is, if I don't pay within 30 days, I have to pay with some interest also. We will go through all these points. As an auditor, first as an accountant, you have to think what are the points. Then you have to convert that point as an audit point. If I am declaring dividend, I should have called the board meeting. Board resolution is passed. Then I have to check whether board resolution is passed, board meeting is passed, minutes of books I have to check. Okay. As an auditor, before declaration of dividend, you should have accounted your loss. You should have accounted your depreciation, accumulated depreciation. Then only you should provide dividend. As an auditor, I have to check whether you provided all your losses and depreciation first. Okay. Once it is and declared whether it is paid to the shareholder within the timeline or not. As an auditor, I have to check all this point. Okay. Now I am going through the theory. Declaration of dividend, section 123. Under that, First para, final dividend is declared in the general meeting. Board have to recommend a dividend declaration of it is ordinary business in the general meeting. So board of directors is recommending, and it is declared in the ordinary business. In general meeting it is done. Final dividend is done at the general meeting. In case of interim dividend, it is done at the board meeting itself. So the point is, no dividend shall be declared or paid by a company or for any financial year except out of profit for that year arrived after providing depreciation. As I said, after depreciation only you have to provide the declared dividend. Second point, out of money provided by the central government, state government. If government is giving for you pay dividend to shareholders, means then we can use that money. Come to the next para. Provided company before declaration of any financial transfer such percentage of profit to the financial asset considered appropriate to the results of the company. In old Companies Act 1956, you have a compulsory provision. If I declare dividend, I have to transfer certain amount to general reserve, or this general reserve as a compulsory thing. If I transfer 10% dividend, I have to transfer this much. More than 10 to 15%, this much thing I have to transfer to general reserve compulsorily. Companies Act 2013, that provision is eliminated. There is no compulsory transfer of general reserve. Okay. If I declare dividend, I need not to compulsory transfer to general reserve under the Companies Act 2013. That is there in your old Companies Act only. So here it is optional. Come to the next page. Come to the next para. Provided that further that where owing to the unadjudicated or absence of profit any financial any company proposed declared out of the accumulated profit earned by the previous year and transferred by the company to the reserve, such declaration of dividend shall not be made except in accordance with the rules as prescribed in this behalf. So present year I don't have profit, but in previous year I have a lot of profit. I have an accumulated profit, but present year only I don't have profit. That time also you should have accounted your loss first, then only you have to issue declare dividend. That's what they are trying to say. That is what they are saying. Provide also that no dividend shall be declared or paid by a company from a reserve other than a free reserve. Free reserve only I can use for dividend. No capital reserve, no securities premium account, no revaluation reserve. All these reserves are not available for purpose of issuing dividend. General reserve P&L account is only normally available for issuing dividend. Okay. Paying dividend. So what is the next thing? Come to the next page, page number 82. Interim dividend. What is interim dividend? Interim dividend is if I am giving dividend in between the year. Final dividend is yearly once. AGM normally it is declared. Okay, it is an ordinary course of business. Interim dividend means in between the company wants to pay something extra to shareholder. As a dividend means they can announce in board meeting itself and they can pay the amount to the shareholders as a dividend. That is interim dividend. So that's what I am going to read. The board of directors of a company may declare interim dividend during any financial out of the surplus in the P&L account and out of profits of the financial year in which such interim dividend is sought to be declared. So interim dividend within the financial year they can pay. Anytime they want to pay, they can pay. Not a problem. Declaration of interim dividend if a company has incurred in current financial year. Current year, for example, what I said was, for example, financial year 1st April to 31st March. I am going to declare dividend on 30th September. 30th September I am going to declare for the same financial year. For the same financial year I am going to declare. For the meaning 1920, I am in the financial year 1920 presently. I am in the financial year 1920. 30th September 2019, I am going to declare dividend. Got it or not? For the first 6 months only this financial year is completed, but I am going to declare this first 6 months itself. But for this first 6 months I incurred a loss in my company. First 6 months financial statement P&L account I incurred a loss. Whether can I declare dividend? Still we can declare dividend still, but there is condition. It should not be more than the percentage of dividend which is already declared in the past 3 years, average of past 3 years. It should not be more than some percentage which is average of past 3 years dividend declaration percentage. Okay, in more than past 3 years I declared 10%, 10 equal to 30 divided by 3 equal to 10. then I should not declare more than 10% in the first interim dividend. As an interim dividend, I cannot issue more than 10%. That's what they said here. I am just reading the theory now. In case the company has incurred a loss during the current financial year up to the end of the quarter immediately preceding the date of declaration of interim dividend, such interim dividend shall not be declared at a rate higher than the average dividend declared by the company during the immediately preceding 3 financial year. 3 financial year I declared 10, 10, 10, 10, 10, 10 equal to 30, average 10, 30 divided by 3 equal to 10. So this financial year I incurred loss, so I cannot issue more than 10% for the first 6 months. That is interim dividend. Okay. Legal provision applicable to interim dividend. The amount of dividend including interim dividend shall be deposited in a scheduled bank in a separate account within 5 days from the date of declaration of such dividend. Interim or final, once it is declared within 5 days, I have to create one separate account. In scheduled commercial bank, I have to create one account. There I have to deposit this amount. Okay. Entitlement of dividend. Who is entitled to dividend? Only shareholder, register of members available on closing date. That date, who is registered there, whoever is registered in the as a member, they are only eligible for dividend. Okay. Come to the next thing. Consequences of non-compliances. If they don't comply, that means company, once they declared, they have to comply all above provision. If they don't comply, what will happen? Third para I am reading. Under the consequences of non-compliance, I am reading third para. Unpaid dividend account transferred to unpaid dividend to separate account. So before that I am reading the third para. What is the third para? Where a dividend has been declared by a company but has not been paid or claimed within 30 days from the date of declaration to any shareholder entitled to the payment of the dividend, the company shall within 7 days from the date of expiry of the said period of 30 days transfer the total amount of dividend which remains unpaid or unclaimed to a special account to be opened by the company in that big of any scheduled bank to be called an unpaid dividend account. What they are trying to say? So 5 days within declaration of dividend, within 5 days they have to transfer to separate account, dividend account. Within 30 days of declaration they have to pay to this shareholders. If within 30 days they have not paid the amount, or the shareholder is not available for because some shareholder might not be available, their bank account is not active, or they themselves not available due to death or some other reason, they absconded. So the point is, first 5 days I have to transfer to separate dividend account for the purpose of payment of dividend. So within 30 days of the declaration I have to pay to my shareholders. It is not paid within 30 days, then I have to create one more account, separate account, unpaid dividend account. Within 7 days from the completion of 30 days, I have to create this account and I have to transfer all the unpaid amount into this unpaid dividend account. Okay. Come to the next page, so 83. Information about unpaid dividend on company's website. What is the thing given here? After that, in my company's website, I have to inform out of this many shareholders, these many shareholders have now collected the money. They were unable to transfer the dividend to their account. List I have to give. Okay. What is the timeline? For that also there is a timeline. I am reading the first line under the page number 83. The company shall within a period of 90 days of making any transfer on amount under section to the unpaid dividend prepare a statement containing the names, last known address, unpaid dividend to be paid to each person placed on the website of the company. So website they have to disclose within 90 days from the date of transfer to unpaid dividend account. Within 90 days they have to put their name in the website itself. This shareholder is not received the amount. It is there in the unpaid dividend account. Okay. The effect of non-transfer. Come to the next thing, effect of non-transfer. If any default is made in transferring total amount to any part thereto to unpaid dividend account of the company shall pay on the date of such default interest on such amount has not been transferred at the rate of 12% per annum, and the interest accruing on such amount shall ensure the benefit of the members of the company proportional to the amount remaining unpaid to them. Once it is not paid, it should be transferred to unpaid dividend account. If you don't transfer to unpaid dividend account, then you have to pay with 12%. Dividend is 100 rupees. 12% per annum rate of interest I have to pay. So if I am paying after 1 year without transferring to unpaid dividend account, if I am paying after 1 year means 100 plus 12%, 112 rupees I have to pay to my shareholder. So the point is, if you don't pay to your shareholder, create one unpaid dividend account within 7 days. From the completion of 30 days, within 7 days you create one unpaid dividend account, transfer all this dividend amount to the unpaid dividend account. Okay. So what is the next one? 12% you remember, 30 days you remember, 5 days you remember, 30 days you remember, 90 days you remember, 7 days you remember, 12% you remember. Okay. 5 days is for what? Once declared, the amount should be deposited in dividend account. That is, dividend account is 5 days. Within 5 days I have to create dividend account and I have to deposit. 30 days is for what? Declaration of dividend. Once it is declared, within 30 days I have to pay to my shareholders. Then what about 7 days? Within 30 days I have to pay. If I am not able to pay within 30 days, I have to create one more account, unpaid dividend account. I have to transfer whatever is unpaid to this unpaid dividend account within 7 days. Then what about 90 days? Within 90 days I have to upload all the information in website related to unpaid dividend amount and related shareholders who is not received the money. Then what? 12% rate of interest. If I don't transfer to unpaid dividend account, I have to pay to shareholder with 12% rate of interest. Okay, per annum. Then come to the next thing, transfer of unclaimed dividend and also shares to investor protection fund. So now the next question is, I transfer to unpaid dividend account. After the timeline, as per the timeline, I transfer the amount. But I am not at all able to trace the shareholder. Shareholder is not at all available. For future year also, shareholder is not available. That dividend amount is lying in the unpaid dividend account for many years. What I should do? So you have to wait for 7 years. This 7 years, this shareholder is not available for payment of dividend. Then after 7 years, you transfer this amount to IEPF account, Investor Education and Protection Fund, formed by Government of India. You have to transfer this IEPF, then it is government money, not your money. Then that is government money, not company's money. But if shareholder after 7 years is coming and he wants that money, means he can claim from the IEPF account. He can approach the central government authority and he can collect the money from the central government directly. But that is belongs to IEPF. Okay. What is the point here actually? Bullet point. So if company fails to follow the above rules and regulation, then 5 lakhs rupees fine may extend up to 25 lakhs rupees. Okay. And also their every officer, it is for company, and officer is separately liable to pay fine of 1 lakh rupees, which may extend to 5 lakh rupees. Okay. So come to the next heading, that is IEPF, again 125, section 125. Now we are going to discuss about what is IEPF. IEPF is not only related to unclaimed dividend. If you anything else also, sometimes deposit money, company is receiving deposit from customer but they are not able to repay, or debenture, anything should be transferred to this IEPF account. IEPF Investor and Education Protection Fund, they started for the purpose of creating awareness, education for the investors. They will do a lot of programs related to awareness creation among the investors. For that reason, they formed this fund, and it's a separate fund actually created by central government. So there shall be credited to the fund. I am reading the page number 84. There shall be credited to the fund sometimes central government will contribute something to the IEPF. That is first point. If central government is giving some amount means that will be credited to the IEPF account. Second one is donation given to the fund by central government. First one is grants, second one is donation, third one is unpaid dividend account. That's what we discussed. And what else? Amount in the general revenue of the account of the central government which has been transferred. Government is also something transferring again. Next bullet point. Amount lying in the IEPF account under section 205C of the Companies Act. Then what else? Interest or other income received out of investment made from the fund. So you got a fund, you got money in the fund from various source. You can't keep that idle. You are investing somewhere. After investment, you are getting interest, dividend means that is also an income credited to the same account. Okay, like this matured debenture, matured deposits with the companies, interest accrued on the amount referred. All these things matured, but nobody is collecting the money. What I should do? I have to transfer to IEPF account. Okay. Come to the next page. Please go through rest of the points. Come to the next page. You please go through yourself rest of the point. Then you continue the video. Don't run the video as it is. Come to the page number 85. Fund shall be utilized for what purpose? I got the money. For what purpose I have to use this fund? As I said, this is for awareness. Normally, awareness creation to the investor. So whatever the fund receiving, I will use for the awareness creation, education, and also refund. Somebody is asking in future, I want my dividend back. I am the exact owner. I want my deposit back. I am the owner for this amount. Then they will refund the amount from the investor IEPF account. Whatever the left amount, they will repay. Okay, that is their major thing. And reimbursement of legal expenses, anything is happened, that also they will repay. So come to the next heading. Authority to administer the fund. Who will authorize this fund? Central government staffs, central government authority only. So for that there will be an administration team which they have some 7 members and chief executive officer the central government may appoint. Okay, that is the authority. Central 7 members plus chief executive officer will be there in the team. They only operate this account, IEPF account. Administration and procedures of the fund. Members only administer. They will appoint a chairperson, members and chief executive officer hold meeting, and they will administer the fund, what to do, how to do, what are the things, how can spend the money, all those things. Okay, come to the next page. Please go through the rest of the point. Come to the next heading, that is books of accounts. What is this books of accounts? IEPF books of accounts. Correct? It is audited by whom? Since it's a government entity, it should be audited by auditor appointed by Central Controller and Auditor General of India. Okay? Auditor appointed by Controller and Auditor General of India, and they will submit the audited financial statement to the government. Government will submit this financial statement to the Parliament. Every year both the houses, they will submit the financial statement. Okay, come to the next heading. Statutory auditor versus internal auditor. This we discussed a lot. I don't know whether this discussion is required now, but you know what is statutory auditor. It is appointed through Companies Act. Internal auditor appointed through Companies Act, or voluntary also I can appoint Companies Act. Voluntary also I can appoint the internal auditor. Statutory auditor will report to shareholder. Internal auditor will report to the members, board of directors. Board of directors they will appoint. Who will appoint the statutory auditor? Shareholder will appoint. Internal auditor is appointed board of directors. To whom they will report? Shareholders they will report. Here they will report to board of directors, internal auditor. Internal auditor is about efficiency, performance, auditing the policies and procedures. Statutory audit is auditing as per the Companies Act provisions. Okay, it is opinion on the financial statement. Statutory audit is about opinion on the financial statement. Internal audit is about reporting the effectiveness and efficiency of the company. Like this you can write many points. Okay, come to the next thing. All the points I discussed is mentioned here only. You please go through those points and come to the next page. Page number 87. Page number 87 is related to auditing and assurance and related to audit of inventory. So again here the topic is about accounting. Inventory means what? Stock. You have to think a lot of characters related to the inventory. Inventory means when it will come, how it will come, what we have to do for inventory. What in order? Inventory means it's a stock class. Stock means what type stock? Raw material, work in progress, finished goods, all these things are stock. As an auditor, what we have to do? As an accountant, what we have to do? How to account? As an auditor, what is our job? Audit or not? First, inventory. What all the characters will come? Valuation of inventory will come as per AS2. Physical verification of inventory will come because I have to count the stock. Correct or not? I have to check the quality of materials also as per the standard or not. Okay, and also I have to check GRN, what all the whether stock received as per GRN. Also I have to check material issue note, MRN, material requisition note. Stores is issuing material to the production department, that is MRN. Okay, like this I have to check all the things. And also I have to check abnormal stock, that is what you can say, different types of stock, moving stock, non-moving stock, damaged stock. Okay, and ownership of the stock. Who is the owner of the stock? Title, ownership of the stock, accounting, all these aspects you have to think, characters. Then you have to convert this point as an audit point. Okay, now you know what is inventory. I don't want to discuss what is inventory again. I will directly go through what is the procedures, audit procedures. What as an auditor, what we have to check. First bullet point, by their very nature inventories normally turn over rapidly. Second point, inventories are susceptible to obsolescence and spoilage, whether some of items of may be slow moving, other may be seasonal pattern of movement. So inventory is classified as moving, non-moving, perishable, non-perishable, damageable, all those things. As an auditor, I have to check whether it is classified properly or not. Okay, all are general points. Physical condition, valuation as per AS2, location, and properly maintained or not, all these points you can write your own points. Okay, based on my discussion, everything is there here. You please go through. I am going to the next heading, that is auditing and assurance standards relating to audit of fixed assets. Fixed assets means again you have to think characters. It's a fixed assets is for long term purpose, plant and machinery, land and building. When I am purchasing the fixed assets, it is not like inventory, stock. I have to get the board approval. Board resolution should be passed normally. I have to check cost benefit ratio, whether this fixed assets can I purchase or not. What else I have to check? Who is the owner of this asset, fixed asset? That as an auditor I have to check ownership of the asset. Then possession of the asset. Then valuation of fixed asset. is plant, property, equipment properly applied or not. Then also physical verification of fixed asset, whether it is available in the location or not. Fixed asset register is properly maintained or not. Accounting aspect, whether this is properly accounted as a fixed asset or it is accounted as a revenue expenditure, capital expenditure, revenue expenditure. What else? Depreciation. Whether accounting depreciation method is properly followed or not. SLM, WDV, whether it is applied properly or not. Block of depreciation is properly classified or not. Like this you can write your own points. Okay. Here they don't give much points. They have given very less points. But what are the points I gave? Based on that you can write your points. One is accounting, legal. Accounting means fixed assets, capitalization of asset, depreciation, and also accounting standard AS10, plant, property, equipment properly applied and valuation of fixed assets arrived. Legal aspect, board resolution, and ownership, who is the owner, legal owner, invoice verification, physical verification, existence of the asset. All this point you write as an audit point. Check whether physically available, whether books as per books and physical is tallied or not. Check whether board resolution is passed for purchase of fixed asset or not. Check whether accounting is done as per AS 10 or not, whether it is properly accounted as a capital expenditure or not, whether depreciation is calculated and provided or not, whether it is updated in the fixed asset register maintained by the company or not. Okay? Come to the next page, 88. Education institution. What is this education institution? Again, we are going to audit the educational institution. What is this educational institution? Normally giving education to the students. So you have to think the characters. Normally education institution is not a company, not be a trust or society or NGO. Such manner only they will form the education institutions. So there will be an educational institution. What are the things will happen? Now what are the characters you have to think? Teachers, students, furnitures, fixtures, land and building, hostel, sports, fees, library. All these things are characters related to education institution. So fees is collected properly or not, whether it is vouching has done, anything excess is collected, anything is not collected, arrears, pending, hostel means whether hostel fees is collected, library, books are counted, purchased, and building, anything expenditure, capital expenditure is properly incurred or not, or any donation received is properly accounted and utilized for the purpose which is received or not, and board meeting is done or not, expenditure paid to salary to teachers is properly accounted, any fake dummy payment is made or not, dummy payment to salaries, dummy payment to staffs, ghost employees. Ghost employees, there will not be any employees, but they will book fake entries, they will take the money out of the institution, whether such type of things is there or not. So like this you have to think. One is fees aspect, student paying fees, it is paid properly within the timeline, vouching of the fees, excess payment not paid, discount anything is given, scholarship is given, it is properly transferred to student account, books is given, it is properly given to recipient or not, libraries, books, opening stock to closing stock, hostel, stationery, hostel and provisions in the hostel, opening stock, closing stock, furniture, fixture, number of table, computer, laptops, opening stock, closing stock, opening fixed asset, closing fixed assets. All these things as an auditor you have to write a point. Okay, teachers payment to attendance maintenance, teachers attendance maintenance, whether it is maintained properly or not, students attendance maintenance, whether it is maintained properly or not. Okay, capital expenditure, construction of building, construction of guest house, construction of library, construction of hostel, capital expenditure is spent as per the plan or not, donation received, legacy amount received, whether the received amount is utilized for the said purpose or not. Like this you have to link and you have to write your own points. Whatever the points I said is given here actually. Whatever the points I said is given here. You please go through all the points. Okay. Come to the next page, page number 90. Audit of hospital. Audit of hospital. Again you have to think the characters first. Hospital means who are the characters? Patient, doctors, medical equipments, pharmacy, building, maintenance, fees, fees, collection. This is the main aspect. Okay. Hospital means mostly trust. Sometimes it is companies also. So if it is a trust, I have to check whether it is they are doing their job correctly as per the trust deed or not, and whether internal control is there or not. Okay, and also billing to the client, to the patient. Billing is done in the system, payment is collected and it is cross checked with the system or not. Pharmacy, whether stock, closing stock, opening stock in the pharmacy, closing stock, opening stock in the pharmacy, check, I have to check, do the physical verification. Okay, think about the characters and the roles. Patient, doctor, medical equipment, physical verification of medical equipment, Okay. Any donation received by the hospital for the purpose of construction of buildings or another block, whether they utilized for that purpose or not. All the points, whatever I discussed, the same point is given here. Come to the next page, cooperative society. Page number 91, cooperative society. Please go through all the points and continue the video. Don't just go through the video. Please go through all the points. Cooperative societies. So cooperative societies. What is this cooperative society? Normally, group of people will form some society for some purpose. Okay, and they will do the purpose for the what they formed. Okay, this is the cooperative society. Generally, that is what they said. First para is about what I said. They will form association who have already joined together, achieve common economic objective through the formation of democratically controlled business organization. So different types of cooperative bank, cooperative society, civil supply, many things for many purpose cooperative society is formed. We will directly go to the audit as per section 17 of the Cooperative Societies Act 1912. All these cooperative societies should follow this Cooperative Society Act and as well as State Cooperative Act. Every state there will be Cooperative Act also. So the point is, first point, the registrar shall audit or the registrar is like a person appointed under the cooperative society. He is like a controller or he will monitor everything. That person will audit or he will appoint someone to audit. Okay, that is the first point actually. In books of accounts, registrar will check or he will audit, he will appoint some auditor to audit actually. And the second bullet point, examination of overdue debt. If anything is overdue, then a registrar will check. Anything we have to anything yet to be received, overdue debt not collected, then this registrar will check. Third point is also about books, accounts, papers and everything verification only. Registrar means, fourth point, registrar means a person appointed to perform the duties of registrar of a cooperative society under this act. That is registrar. Come to the next thing, qualification of auditor. Generally only a chartered accountant, generally only, not legally. Generally cooperative society means every year they have to prepare the financial statement, statement. That should be audited by auditor. That auditor need generally a chartered accountant, but state cooperative society, they will appoint government officers or some other person also as an auditor, not only chartered accountant. That's what they are saying in that para. Go through that para. Go to that para, please. Just go through the para. Okay, what I said was given there. Appointment of the auditor. What is appointment of auditor? I am reading the appointment of auditor theory. An auditor of a cooperative society is appointed by registrar of cooperative, and the auditors who appointed to conduct the audit on behalf of the registrar and submit the report to him also to the society. The audit fees are paid by society on the basis of statutory scale of fees according to the category of the society auditor. For example, audit fees of cooperative society and urban cooperatives are to be calculated with reference to working capital of the prescribed rate. Working capital here means funds of the disposal of the society includes of paid up share capital, funds built up of profit and money raised by borrowings and by other means. What they are saying, auditor is appointed by cooperative society and auditor has to report to the cooperative society, and auditor fees is fixed by cooperative society. Okay, all those things they are saying. And in case of cooperative banks, fees is calculated based on the working capital. That's what they are saying. But the point is, auditor need not be a chartered accountant here. Any person recognized as an auditor can do the audit. That's what they are trying to say. Come to the page number 92. Books of accounting records. What is this books of accounting records? Normally cash book, purchase book, sales book, ledgers, data, whatever the books, the same books. Okay, books of accounts. Example, they have given Maharashtra Cooperative said you have to maintain cash book, general ledger, personal ledger, stock register, property register, etc. Okay, you know what is cash book, stock register, register of assets and investment, fixed assets register, investment, register of fixed deposit, If you collected money from your depositor, you have to maintain the register, name of the deposit holder, address, telephone number, mail, amount, maturity amount, rate of interest, everything should be there. Okay. Then restriction on shareholding. Only the member can become a shareholder in the cooperative society. Okay, and also limit is there. You can't hold more than this percentage in the cooperative society. What is that? We will understand a restriction on shareholding. One more purpose. I am reading this one actually. Shareholding in a cooperative society is subject to limit prescribed in Section 5 of the Cooperative Society Act 1912. According to no member of the society other than a registered society can hold more than 20% of the total number of shares of the society, or such number of share value exceeds 1000. Thing is, they can't hold more than 20%, and also they can't hold the number of shares in which value exceeds 1000 rupees. It should be less than 1000 rupees. The cooperative society cannot prescribe any other limit in bylaw. They can't put their own bylaw. So this is the law. 20% you remember. They can't. Other than a register can hold no member of society other than a registered society. Member of other than a registered society. No member of the society other than a registered society. Only registered society can hold more than 20%. Other people and all can hold less than 20% only. Okay. So restriction on loan. Cooperative society cannot give loan to the peoples. What they are saying, registered cooperative society can only grant loans to its members though. With prior approval of registrar, it may grant loans to other registered cooperative society. Audit should the loans granted by the society in or in conformity with this provision. The point is, cooperative society can give only loan to the members and other registered cooperative society, not to the third party. They can't give loan to companies. They can't give loan to any other person. Okay, only members, other registered cooperative only they can give. Restriction on borrowing. Cooperative society may accept loans and deposits from its members as well as non-members. Members as well as non-members also they can accept loans and deposit. Auditor duty to ascertain the restriction if any laid down by bylaws are carefully observed. Bylaws they have to check auditor. If there is any restriction that they have to follow. Next page, come to page number 93. Investment of funds. What is this investment of fund? You collected money, you are generating revenue. You can't keep the fund idle. You have to invest somewhere. That investment you can't make as per your own wish. You have to invest in this unit, this securities only. You can invest in central or state cooperative bank. That is what given there. I am reading the bullet point. You can invest security specified in section 20 of the Indian Trust Act. Any share, security, bonds, whatever of any other cooperative society within the limited liability. In this source only you can invest, not in other areas. Okay, you remember. If you are investing, I want to purchase some famous company share. I can't do that. If I want to invest in some famous finance company, I can't do that. It is not permitted here. Auditor's duty. Auditor has to check whether they invested according to the rules and regulation. That is the auditor duty. Then come to the appropriation of profit. According to Central Cooperative Society Act, 25% of the profit of the cooperative society should be transferred to the reserve fund before distribution of dividend or payment to bonus to its members. Our register may, having regard to the financial position of the society, reduce the percentage of profit transferred to the reserve, but in any case, it cannot reduce it less than 10% of the profits of the society. What they are trying to say? Transfer of profit, appropriation of profit. 25% of profit should be transferred to reserve account mandatorily. Before declaration of dividend or before issuing bonus to the members, I have to transfer 25% of profit to the reserve fund. If I don't have sufficient money means at least minimum 10% I should transfer to the reserve fund. That is rule, law, you remember for one mark purpose. Come to the next one. Contribution to charitable purpose. According to section 34, a registered society may, with the sanction of the registrar, contribute amount not exceeding 10% of the net profit amount remaining after the compulsory transfer to reserve fund. So first I have to transfer to reserve fund 25%. Thereafter anything is there, 10% I can contribute to charitable purpose, not more than 10%. Special points in a cooperative society. What is this special point in a cooperative society? First bullet point, I am reading. Audit should carefully go through the bylaws. Bylaw means state, each cooperative society they will have their own rules and regulation, but that should not violate the Cooperative Society Act. They can create bylaws, but it should not violate the main act. Okay, that I have to check as an auditor whether this bylaws is also complied or not. He should check the register of members, how many members in this cooperative. So that also I have to check. Okay, I have to check the internal control, internal check also I have to do. We discuss what is internal check, internal control in depth in a separate topic. You please go through. Page number 94. You please come. Audit of income. So cooperative society is doing something for their members or society peoples. They will collect the income by cash or bank. As an auditor, I have to vouch all those things. Vouching, numbering, accounting, whether all these things properly happened or not. Okay, whether it is properly accounted or not. Okay, audit of expenditure. Next thing, expenditure, who has to approve, who is having authority to approve the expenditure, whether it is spent as per the approval or not. I have to read the trust deed, cooperative society deed, who is eligible for what, who can sanction the expenditure amount, whether it is properly accounted or not. That also I have to check as an auditor. Other aspects points. What is the other aspects point? You should appropriately classify overdue debts for a period more than 6 months to 5 years and more and report them to the members. If anything is debt more than 6 months to 5 years, you have to separately classify and you have to report to the members. Second bullet point. Similarly, you should make a special reference to the overdue amount of interest from members. Generally, interest on overdue debts should not be credited to the interest account but to the overdue interest reserve account. Point is, if anything is interest also not received from the overdue amount, and the overdue amount interest is also not received, means that also I have to separately disclose. Okay. Third bullet point, writing of bad debt should be prior authorization from the managing committee. If anything cooperative society want to write off as a bad debt, then they have to get the approval from the managing committee. In case of Maharashtra, their cooperative society act says if you want to write off, you get the auditor certificate, you get the bad debt certificate from the auditor, then only you can write off. That is the provision in Maharashtra. Okay. Next topic is bank audit. So bank audit is about auditing the banking industry. So you know what is banking. It is accepting deposit, providing loans to customers. That is their major activity. So we will understand about banking more and during our we will discuss accounting for banking in upcoming session. There we will understand about banking. So come to the page number 95. Page number 95 is basically types of bank: commercial bank, rural bank, cooperative bank, development banks, small finance banks, all these types of banks. And balance sheet, P&L account is given. So auditing the balance sheet, P&L, lot of item is given here. We will discuss all this balance sheet, P&L during our accounting for banking session. So I am leaving this topic. Come to the next page, 96. So advances. What is advances? In terms of bank, what is advances? It is called loans and advances. Normally, giving loans, giving working capital facility, giving credit, giving what you can say, cash credit facility, OD facility, loans, term loans, personal loan, all type of these things are related to advances, loans and advances. As an auditor, what we have to do? We have to check the agreement, we have to check the policies, we have to check the internal control, we have to check the ledger accounts, think in the aspect of documentation, think in the aspect of accounting, think in the aspect of control. So this is the general thing actually. So that is what said here also. First, check the first point here, advances. Ensure the internal control is in place in relation to advance made. So whether there is a proper control in the bank or not. to scrutinize the subsidiary ledger and control accounts. All the accounts, ledger, personal customer account, bank statement, all those things we have to check. Third point, to ensure the proper documentation of account. When we have to give loan, we have to get lot of documentation. Okay, all those documents we have to check. When you normally go for a bank audit as a concurrent auditor, if you visit the bank, you will get to know a lot about bank audits. Okay, and next thing is cash in hand. Cash in hand means it is available with the bank or branch. Daily we have to check whether the posting is done in the system. Physical verification of cash, book balance, cash balance, both are matching. All the vouchers are accounted in the system properly. So that is the general knowledge. You have to think first of all control aspect, accounting aspect. Since cash is a physical item, physical verification of cash, all those things you have to check. That is what said here. First point is ensure that internal control is in place. Visit bank branch and inspect physical cash and ensure that you tally with the bank cash book balance. Physical cash balance versus book balance matching. Okay, to verify the amount of foreign currency held by bank and translation at market at the date of financial statement is prepared. If they have any foreign currency, whether they properly accounted, the value is also as per the market rate or not, that also I have to check as an auditor. Balance with other bank. As an auditor, what I have to do? Balance with other banks, balance with RBI. If anything is balanced with other banks, I have to get their statement, bank statement, their bank statement, and the closing balance comparison and reconciliation. Why it is not debited, why it is not credited, check in transit, all those things. Okay, charges. Now you think about your BRS. Okay, so that is how balance with RBI and balance with other banks should be audited. Money at call and short notice. So money at call and short notice, that also we have to check the accounts, we have to check the internal control, who is eligible to money at call. Is like a short term loan actually. So whenever it is whenever we demand, they have to repay the amount. That is the money at call and short notes. Okay, fixed and other assets. Fixed assets characters: accounting, control, ownership, physical verification, depreciation, accounting standard. You have to write all this portion. Check whether it is properly ownership. Check the accounting method. Check the ownership. Check the depreciation aspect. Check the deed. That's what said there also. Okay, come to the next one. Banking and deposit. Come to the next one. Banking and deposit. What is banking and deposit? Under that, borrowings. Bank is borrowing. Borrowing means we have to check RBI procedures and also approvals for borrowing, rate of interest applied, all those things we have to check. Whether borrowing in India or outside India, whether it is within the permissible limit, whether it is properly disclosed or not, all the point is given here. Deposits. Deposit is received from customers. Okay, whether we are it has been classified as a deposit or any other aspect thing. Whether deposit is classified as borrowing wrongly, whether the maturity amount and interest accrued on deposit is properly accounted, interest payable for deposit is properly accounted or not. Capital, reserves and surplus. Capital, we have to check the opening balance of the capital. And the MOA, if anything is increased, then we have to check if there is any increase in share capital. Okay, check any inflow during the year, any new issue of share capital during the year, that also we have to check. All these things are general point. Okay, what I suggest is you please go through all these points. I'll be leaving to the next topic, that is audit of trust. Trust means what? It is like an NGO, non-profit organization formed for some social cause or charity purpose. Trust means there will be trust deed. First of all, audit the trust deed first. Trust deed la, who is the chairman, who is the committee members, who is having authority to what, how many times they have to meet, whether all the things are properly executed as per the trust or not, complied as per the trust or not. Interest of members, whether next thing is list of members, who is the list of member, trustee members, who are the people beneficiary, budget, how much they can spend for the year, internal check, internal control, whether proper internal check, internal control is there, collection and deposit of income, whether trust income is properly accounted, vouched, and whether it is deposited to bank properly or not. Okay. Subscription and donation given for some specific purpose, subscription is for some specific purpose, whether that purpose, whether they are using the money for that purpose or not. Okay. Legacy is also similar to that only. Income from investment, trust is investing the amount, they should not invest as per their wish, they have to follow the trust rules and regulation, accordingly they have to invest. Rent trust will be having some properties, land on the trust name, they have to collect the rent properly as per the rental agreement, and it should be accounted in the trust account properly. As an auditor I have to check. Income and expenditure relating to concert, so they will trust normally will organize some special function such as concert or some other events, so trust will organize. As an auditor I have to check what is the budget, what is the expenditure incurred, what is the income generated on this, whether it is properly accounted, who is responsible for this conducting the concert, all those things. Okay. Come to the next one, audit of municipalities and panchayat, local bodies, it is like partial government. Okay. So again same thing, internal control, amount spent, any fraud and error, same point you can interchange and write. Okay. Come to the self-examination question. So fill in the blanks, or what? First is true or false. True or false I am reading. Okay. First, true or false. Branch office in relation to company means any establishment described as such by the company. True or false? It is true, any establishment. Okay. Branch office means company saying something, it is my branch office, that is their branch office. We should not question branch office should look like this, or branch office should have this much turnover. There is no criteria like that. Okay. Point number 2, when a company has a branch office, the accounts at the office shall be audited by auditor appointed EGM, not EGM. Similar to main auditor, branch auditor is also appointed. So it is false. Okay. How the main auditor is treated, the branch auditor is appointed in the same manner. Point number 3, where the branch office of a company is situated in a country outside, the accounts of the branch office shall be audited by either company's auditor, by an accountant, or by any other person duly qualified to act as an auditor. True. Main auditor or any auditor who is qualified to act for in their country, we have to see. In their country there will be solid qualification, that qualification is eligible for conducting audit. Now we have to appoint that qualified person as an auditor, like CPA in USA, like that. Example. So next, fourth one is, the branch auditor shall prepare a report to the accounts of the branch examined by him and send it to the audit committee or auditor. Branch auditor is job they don't have job with the audit committee. Branch auditor report should be submitted to auditor, main auditor, statutory auditor. He will submit the report to audit committee and the board initially. Thereafter it should be presented to the shareholders later on. Okay. The point is, branch auditor has to report to main auditor, that is what. Okay. Point number 4 is false. In big corporate, more than one person of firms are appointed as joint auditor for conducting the audit of the company. Normally, if required, they will appoint one more auditor, that is joint audit. Okay. True. 6, debenture include debenture, stock, bonds, or any other instrument of a company evidencing debt whether constituting charge on assets of the company or not. True. Debenture is a secured debenture or an unsecured debenture. Both is debenture. It is an instrument of a company evidencing a debt. Company is liable to someone. For that there is an instrument called debenture. So that is true only. 7th, final dividend is declared in the general meeting. Yes, of course, it is declared in the annual general meeting normally. True. Only interim dividend can be declared at the board of director level actually. Point number 8, statutory auditor is appointed by the shareholders in the general meeting. Correct. Shareholder only will appoint the statutory auditor. Internal audit is appointed by the board. Point number 9, internal auditor can be removed by the board. True. Internal auditor is appointed by board and removed by the board. True only. 10, if the debentures are issued as a collateral security to the bank secretary, the auditor needs to ensure that such a issue is approved by the debenture trustee. Such issue is approved by, not by debenture trustee. Such issue is approved by the board of director, not debenture trustee. So it is false. Okay. Final dividend is declared in the general meeting. Fill in the blanks I am reading. First answer is general meeting. Second, if the debentures are issued as a collateral security to the bank, auditor needs to ensure that such a issue is approved by board of directors. That is the answer. Second one. A predetermined dash of interest, rate of interest. Actually, rate they given the answer, but the actual answer is rate. A predetermined rate of interest is payable on debenture irrespective of the fact that the company has earned that profit or not. That is the answer. Okay. Fourth one. Debenture holders are owners of the company or creditors of the company? They are creditors of the company, not owners of the company. So creditors is the answer. Then what? Fifth one. When debentures are issued by a company, the company shall create what account out of the profit of the company for the purpose of redemption of debenture. Debenture redemption reserve they have to create, so that in future they will pay the redemption amount easily. For that they have to put some one amount as a reserve. As a particular interval they have to create a reserve and they have to keep in their balance sheet. Okay. While repayment they have to use this reserve for redemption purpose. Point number 6. For protecting the interest of debenture holder, the company is bound to form what? I think debenture trustee. They have to form the debenture trustee. For the debenture trustee job is he will protect the interest of the debenture holders. 7th. Responsibility to report fraud as applicable to company applies to branch auditor also. Branch auditor is also responsible to report the fraud. That's what we studied above. Point number 8. Splitting of shares shall be authorized by what? Authorized by articles of association. Then only you can split it. Point number 9. Come to page number 105. A company may issue debentures with an option to convert such debenture into shares. That is called convertible debentures. Answer is shares. Point number 10. Statutory audit is appointed by the shareholder in the general meeting. Okay. That is annual general meeting. You can call it as general meeting. Match the following. I am reading the match the following. First point is more than one person or a firm of chartered accountants are appointed for what purpose? Joint audit purpose. Section 68 is for what purpose? Section 68 is for buyback of shares. Section 63 is for what purpose? Bonus share purpose. Section 61 is for what purpose? Alteration of share capital. Section 139 of the Companies Act, branch audit or main audit. Both audit section 139. Appointment under the Companies Act. Audit appointment under this audit under the Companies Act section 139. Okay, it includes main audit, statutory audit as well as branch audit. Multiple choice question I am reading. Audit of debenture is covered under which section? Which section it is? Section 71. Please remember. Okay. Declaration of dividend is covered under section 123, I think. 123. Yes. Answer is 123. Statutory audit is appointed by the shareholder in the general meeting, not statutory meeting. Statutory meeting we already discussed what is statutory meeting, which is not applicable presently for Companies Act 2013. Okay. So it is general meeting. Answer is general meeting. Statutory audit can be removed by whom? Shareholders. Ultimately, a special resolution has been passed for removal of shareholder. Remember our previous topics. Special resolution is passed only in meeting only, general meeting only. Okay. Fifth point. Internal audit is appointed by board of directors. Okay. So with this, auditing topic is over. So as I said, auditing totally 50 marks. Out of that 14 to 15 marks, 1 mark. That is why I am covering 1 mark also. So all the 4 topics are important only. More important is first chapter. Next one is cost audit and secretarial audit. That is also important, but volume is very less. So you can expect around 6 marks from that topic actually, because volume is very less. Only 2 topics, cost and secretarial audit. So first topic you can expect, first chapter you can expect around 8 to 10 marks. Second topic you can expect around 6 marks. Third topic you can expect around 6 to 8 marks. Fourth topic also you can expect around 6 to 8 marks. Okay. So this is the pattern. So with this, auditing topic is over. You have any doubts in respect of auditing, you can message me. And what I suggest is you start prepare now itself. Don't wait for examination time preparation. Please start studying now itself. You go through all our videos. Totally we have 10 videos related to auditing. 10 videos I uploaded totally, inclusive of this one. It is totally 10 videos relating to audit. It is around 14 to 15 hours. If you see, I uploaded around 14 to 15 hours videos if you add all the 10 videos. So if you spend this 14 to 15 hours, you can cover this maximum of 50 marks. And I suggest to go through the material wherever we have not discussed due to time constraint. You please go through all those points also. You can able to easily understand based on our discussion. Okay, all the best. Thank you.